I think those things are still relative, but they're not as relative as when I was started out almost 40 years ago, because half the market is being driven by computers that don't care about fundamentals, don't know the president and the CEO. It's mathematics, it's algorithm, it's a high tech casino.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with returning guest Peter Grandich. Peter, thanks for coming back on the show.
Uh, Very glad and happy and honored to be here, Steve.
Thank you. Thank you. Okay, let's start out like we always do. What is your macro, big picture view of the world economy and financial markets?
Well, I think the world economy is going to play a big role on what's happening in China. There's really two separate camps now. There's a camp that thinks they're going to recover somewhat and maybe not be the big tiger they once were, but certainly a lot better than recent years. And then there's another camp that's getting more members in it that says they may be rolling over and rolling over in a tough way. And I don't know which one to go with. I think they're on the fence. I think there's a few things to go. I do say this. I tell people, so goes China, so goes the world economy over the next 6 to 12 months. Uh, I think the other geopolitical concerns is, as we talk today, stories broke that the United States is preparing an evacuation plan for Americans out of Taiwan. I mean, I just don't see that as coincidental when we just had another reports of all sorts of jets from China, going into Taiwan space. Also, maybe there's something afoot, or fear that something's afoot. That certainly would have a major impact. I mean, it's certain people are going to have to take sides on that one. It was one thing letting Hong Kong slide away, even though they weren't supposed to do what they did. It'd be another about Taiwan and all. So that would probably be the big story. So economically, China is still important. And of course, we're still going to likely see inflation not anywhere near the level it just was, but it's not a boogeyman that just disappears and goes back in the bottle. And so how the Fed reacts to that, my best guess, and maybe by the time this airs, you'll already have known the result, but my best guess is even if the Fed do raise again 0.25, they're going to have strong wording that this is probably now going to be a pause and wait after that. So with that, and with one of the greatest, I don't know how, whoever's in charge of doing the BLS, the Board of Labor Statistics, they do magic unlike any. They could have a Las Vegas act, because how they've been able to stroke these numbers when we're seeing all sorts of layoffs and housing survey just terrible. I think we're going to start to see finally that the economy is not as strong as everybody thought, and that it will see a much slower U.S. So we may not fall into a deep recession. I know there's this group out there that's still looking for 50% decline in the stock market on this horrible recession. I don't think there's anything out there yet to suggest that's a legitimate concern.
It's interesting what you said about China and the U.S. saying that they're encouraging Americans to leave Taiwan. I hadn't heard that.
It's just prepared. The stories running today is that the United States is preparing a plan on how to evacuate. Now, you could argue and say, well, they don't want to look like they did in Afghanistan if something happens. I mean, that could be the positive way to spin that. But the coincidental of that, and then on the same day reading how many Chinese warplanes just crossed into Taiwan airspace, you start, when you live in this world and you start to know that a lot of things are happening. By the time you hear it, it's too late. I think it's more than coincidence that those two stories ran on the same day.
Yeah. Okay, that's interesting. So for our listeners, if they have any investments in China, that might be a concern.
Well, China's always concerned. It's a semi-rigged market. Not to say the United States isn't semi-rigged, that sign appears, or the metals or things of that nature, but they don't have still anywhere of the legitimate reporting that is required here. So China, that's one of the reasons why PEs on average for so-called similar companies are less there, because people aren't going to pay up for that. I think the concern would be is in Taiwan, which is semiconductors. I mean, there's a lot of fear that if that was, you almost, I mean, it was even a story that ran a couple of weeks ago that the United States would have Taiwan blow up those buildings rather than let the Chinese have it. I mean, you can get into all these things and start prepping and start thinking of dry food and ammo and all. I don't. but it is concerning and it could have a major effect. But right now, it's jargon, it's chatter. It isn't anything real serious to say that's happening as we speak.
Okay. Yeah, the Russia war really kind of hit me. I mean, I didn't have a lot of investment in Russia, but I did have Gazprom and Polymetal and I guess, in hindsight, when you got 100,000 troops lined up outside the border, that should have let me know. But I didn't think that the U.S. was going to do any sanctions on Russia. Do you think there's a possibility they could do some kind of sanctions like that on China if they do invade Taiwan?
Well, certainly, listen, I think that may end up being the minimum, what would happen. It'd be very hard to imagine that Japan, Korea, Australia would also want to see just let that go and say, okay, you guys got Taiwan now. So it is a can of worms, and it comes at a time when there's no question that the United States is no longer the friend of many in the world. And so that also will play a role in what could be the responses as well. And quite frankly, how our election goes, because there is a certain group that wants to see us continuing to support all sorts of military action all over. And then there's a group that says it's time that we stop that and focus on all our problems here. So those are all things in the mix, and we have to play it as it comes, Steve. I think everything else would just be a guess.
Yeah. Okay. Okay. Got a question on the recent run up in tech stocks. Do you have an opinion on that?
Yeah, well, first of all, let's remember they were the most beaten down last year. And this goes to what I've talked in recent weeks about a coming rally, so to speak, because the professional community, so-called advisors, they've experienced either one or no financial crises. They've lived in a one-way street until last year. Wall Street has a history, in my opinion. I coined it the "Don't Worry, Be Happy" crowd. Steve, you might have heard me say this before. A lot of these folks could be tossed off the top of the Empire State Building. They'll say the same thing all the way down. Hey, so far, so good. It's just a overly optimistic, the cup is always half full industry. Okay. So the fact that they were beaten down, there's still a lot of money around. It's not like everybody took their money out of the stock market and put it in, under their pillow. It gave pause to, and then this has been a technology driven bull market to begin with. That's been the lion's share, what did well when it was going up. So there's no surprise that they haven't been rebounded. What the concern would be is, and why I'm not a 30 or 50% decline person, I'm also not a 30, 50% increase person. And one of the concerns is here now is that much of the gains or the rebound to where we actually turned positive has been on the back of less than 10% of all the stocks in the S&P 500, which is very poor. If there's still any technical reasons to look at stock markets, you want to see more participants as a market goes longer, not less and less participants, or all dependent on a handful of companies. That's why people say, hey, they say the market's up, but I'm looking at my portfolio and it's down, because if you didn't have those few, you were down. So it's good that it rebounded if you're bullish, but you better start to see real expansions on breadth and new highs, new participation, more volume on the upside than downside. I think those things are still relative, but they're not as relative as when I was started out almost 40 years ago, because half the market is being driven by computers that don't care about fundamentals, don't know the president and the CEO. It's mathematics, it's algorithm, it's a high tech casino. So technicals is not as important as it once was, but it still needs to be considered.
Yeah, the stat I heard was 90% of the trades that are taking place in the stock market are done by computers.
Yeah, I mean, to think about this, Steve, when I entered the business in 1984, Merrill Lynch published 90% of the trading on the New York Stock Exchange that year was retail investors. Only 10% was institutional, and there really was no computer yet. Computer program trading just entered before the crash in 87. Had just started at that time. To think that was when it was a stock markets. That was when you came to buy and sell individual ownership of businesses. That, to most people here, is long gone. This is a very sophisticated, high-tech, casino-like operation that the small person has little or no chance. When small people tell me they're sitting home and trading, I just turn to my wife and say, 5, 4, 3, 2, 1, because they're going to be counted out. I mean, it's beyond David and Goliath.
Yeah, yeah. Okay, we got a question on okay, there's these 2x or even sometimes 3x inverse ETFs or ETFs that go 2 or 3x to the upside when betting on a sector, right? So one of them in particular here is called Boyle, and it's for natural gas. It's a doubling one, So if that ETF goes up, then this one goes up 2x. But as you hold, the longer you hold it, it really eats away at your principal. Can you speak to those? How you have to be kind of cautious, and they're really for like short-term trading.
Sure. So I used to do the speaking tour for a lot of years, and perhaps one of the more colorful speakers at the time, one of the most popular newsletter writers of all times, was a man named James Dines. And Jimmy used to like to say, timing is everything. Think of the poor guy that invented preparation G, because it's preparation H that became the selling point. So in those things, in those reverse things, you may be right about where you thought the move was, but because you were a little early and it's leveraged against you, you lose out before you have a chance to what you always thought was going to be correct. So I think those things are pure gambling. It's the same as going to a casino and betting roulette if you want. But I do think the underlining to look at oil and natural gas is interesting. We're clearly seeing everything that was feared just before or when the Russian invasion started. All the thoughts of natural gas and everybody was going to freeze and all that. It really didn't materialize, and natural gas was especially punished in that. We have ample supply of it, although this president talk about getting rid of, gas fired this and gas fired that. We have all the stuff that can take care of ourselves, and he wants to get rid of it. But the bottom line is we are seeing also a very serious pullback in oil, even with the Saudis coming out and really putting their foot down. And that's why the camp that still says there's a serious recession coming has something to hold on to, because oil is very economically sensitive. So I think if you're looking to do something, maybe buy a natural gas fund that either buys natural gas companies or focus on a particular area. But those double and triple X things, maybe you got a little money and instead of going to the casino one day, you throw it into that. But normally your timing is what kills you there, and you end up the leverage comes back to haunt you.
Yeah, I've experienced that. I've bought in those and been right, and then when I sell the position, I was only up like 1% when the industry moved far more than that, because they eat away at it,
Correct.
over time. So this is not those things are not a long-term hold. Okay. All right. When it comes to mining, let's move on to some of the commodities here. What countries do you look at that are most friendly to mining?
Which ones are left may be the question. And I say that half-heartedly joking, but 20 or 30 years ago, when I spent a good part of my life day to day in the metals and mining, we could have spun a globe, Steve, and let our finger land anywhere, and just about anywhere it landed, it was okay to go there. That's not the case anymore. We're seeing a lot of geopolitical issues. ESG has played into it. Politics have played into it. Economics has played into it. Even the fact that people never considered, now countries want to, in a sense, nationalize or take more interest in what that may be. So I personally, other than maybe a real rare, it'd have to be a special situation, have confined my views to North America, Canada, and the US. And even there, I don't want to go in California. There may be a province I like to choose over, like I think Quebec may be one of the more friendlier places where perhaps another one may not be. But North America, maybe Mexico, and something's very special, but even there now, because we don't know what the official changes are going to be in the mining law. But and what's ironic about this, all these things are happening negative for mining, while over the last 10 years, so little money's been put in it, and so much future demand of everybody is talking bullish on Wall Street, and market's going to go up and everything's going to be electrified and all. And I say to those people, where are you getting the metals from to do all this? And the cost of what that has to be, and so forth and so on. So I think it is very, very important. I just don't think you can just pick any place and not take into concern. I myself have really confined myself to North America.
Okay, so America, Quebec or Canada, and possibly Mexico, but the deposit and the management's got to be really
Yeah,
good.
the management would be real key because the mining law is going to change. It's not going to change habitually bad, but it's going to change. But then again, you have other issues in Mexico, most really the lawlessness in some areas and all, and that would play a point. I would tell you clearly there is who's ever involved, you better be involved with strong local Mexican management, not a guy sitting up in Vancouver that's a promoter and the project is happening down in Mexico. That's asking for trouble at this point.
Okay. All right. So the next question was basically which countries do you completely avoid? So it sounds like pretty much anything outside of that area.
Well, I just think that's the safer route. I'm certain, listen, people have made a lot of money following Robert Friedland. Okay. I knew Bob from the early days from Galactic Resources. And, and that didn't turn out right. And you could have said, oh, but since then he's managed to go some places in the world we wouldn't, and he's done really, really well. If you're going to go in those places in the world, follow people like that. That's your only opportunity, I think, if you're going to go into more riskier places in the world.
Okay. All right. Yeah, he's got the Africa. Okay. All right. Got a question from Carlos. Question for Peter. Many analysts have pointed out that the rally to the upside in gold and silver mining companies won't start until 2024 or 2025. What do you think about this? What's the timing you're looking at?
Well, if we would have had this interview 6 or 12 months ago, I would have said to you, which I did to others, hey, what a time to be in my mining shares. They have really gotten cheap. Okay. So I am not the best possible person to answer that question at the moment, but I did write something that I put out. It was called Mining and Metal Shares, Goodbye or Goodbye. And realistically, in the 40 years I've been at it, this is now it's become unimaginable the spread for what the little valuations that are being given for juniors particularly versus the overall metal prices. But if I may just take 2 minutes on this, Steve, this kind of point, just two of the key points of many that I made in that report. The first is it's much, much harder for a junior resource company to gain attention now than it was 10 or 20 years ago. First of all, in North America, there were thousands, if not tens of thousands, of financial advisors whose book of business was buying and selling individual stocks, and many of them specialized in resource stocks. So if you got that one guy or gal interested, you got their 100, 200, 300, 400 clients interested. That's a dinosaur. There may be a handful of those people left, but almost nobody goes to a full service financial advisors and pays full service brokerage commissions for it. So they had to get into other areas of the business. So that's a lost leader that would have been how to get to the end user for junior. The second is everything's become overregulated. Here in the US, even the discount brokers, some of them won't even allow a person to buy a stock, even if it has an OTC symbol and it trades in Canada. It either has to be on the New York or the regular NASDAQ. And then, of course, they just clamp down on the juniors where they can say next to nothing about their projects. The problem is most juniors only have sizzle. They're looking for the stake. But if you don't allow them to sizzle, there's no chance they can get the stake. There are other reasons, but it's much more difficult. And that's why I think we've seen the underperformance to some extent. That's not an excuse for anybody that's been bullish like myself and all to just move that aside. But that and the fact that it has just been not the best conducive bullish market. Here's what you're not going to see. You're not going to have the stock markets coming down. You're not going to have all sorts of geopolitical, political problems, economic problems. And during all that, while people are selling their IBM and their treasury bonds, they call up or go on their discount broker and say, hey, buy me a junior resource stock. Just doesn't happen. So one of the mistakes that people make that like junior resource stocks is the root for bad things to happen in markets. No, that's not conducive to it. You don't want to be super good things, which are avoided, but horrible times is not going to drive people in to buy junior resource stocks. But given all that, what I just said, the only other thing that possible is somehow I missed the bell, the door closed, and that industry has come to an end. I doubt that because I know how much the world needs metals. And a young lady published something that I retweeted today on Twitter, how little money over the years has gone into juniors, especially in 2022, that when the world finally wakes up and realizes they need all this additional metals, the money has just not been there, and there's not about to have a bunch of deposits come online that's going to provide all these metals. And that's when the next real bull market would hit, when that finally becomes evident to most people.
Okay. And what is your base case for copper?
I felt that 350 would be the bottom. As you can see right now, my toes and fingers are crossed on that. But because if the economy does really peel off at this point, even though the long-term picture has only gotten better, it could go below that. And a lot has to do, again, copping out back to, look at I said copping out. I didn't mean to say it in that way. But what happens in China, Steve, is going to play a role in that as well. Uh, my best case scenario is that it's better to be too early than too late. Where we're priced now, even if it goes back to 3.25, one day it's going to be printing at 5 or 6 because that's the only way high prices are going to bring people in to put money in to really find new mines so we can provide all the metals that's going to be needed over the next 10 or 20 years.
Okay. What's your favorite copper miner right now? Is it still Arizona Metals?
Arizona Metals, and funny as we speak, I just put our report from a project standpoint. I could not ask for better. They have it. They just continue to prove a project currently only makes up 3% of their whole property. Like clearly now is worth 2 to 3 times the price of the current stock, in my estimate and estimate of some others, even the people that put out research on it today. But because of some of the things we just discussed, the attitudes and what's happens with metals, it's been killed. But it's in the right place in Arizona. It has no royalties. It has cash. It has 40 something million. It has all the money. It even has assets. It could sell royalties. It probably will never have to go back into the market to raise money to drill. That's
Wow.
how good of a story it is. And their project, which already supports a stock price, I think 2 to 3 times higher, would have been the third choice to drill, except it had an historical findings that the other two didn't. Now they've just gone to their primary one that they would have drilled first. And in the first two holes, as they noted today, they've already seen significant mineralization without assays yet. I just think it's the story of my lifetime and why I made such a big bet on it. But it's the type of story that it's not just like that. There are a lot of other stories out there now like that because the metals, particularly as we go down the food chain, the baby has been thrown out with the bathwater.
Okay. Okay. How far away are they from building and moving on to?
Well, I don't think these guys will ever build it. I think they've made it known that this will be sold.
Okay.
To be sold to a major and all. But when you think about in this 2 short years, we're now looking at some of the analysts put out today that they see the K deposit, that's the first one that they drilled, is already somewhere between 20 and 24 million tons. That's world class already, Steve. And
Wow.
they still haven't even come close to finding the bottom in that one. And that's supposed to be the, of the three, the third smallest one based on geological stuff. Doesn't mean when you go over there. So there's, as I like to say to everybody, as I just said to my best friend in the world, there's 20% downside and there's somewhere between 200 and 1,000% upside in my biased view.
Those are pretty good odds.
Well, it doesn't because they're good odds doesn't mean it happens. I've
True.
heard, I've had enough, I've had other things I thought was good, but this is an extremely special. And management has been so focused on the project that they've actually, excuse the word, sucked on IR. But one of the reasons I believe that they have, because they don't need to. They feel they have it. They have all the money in the world, so they don't have to be out every day ringing a bell to try to get the stock up 5 or 10 cents. But I do think, and I am, by the way, sending out an email to friends that are not yet in it, and I haven't done this ever about this stock, suggesting the time has come that they look at it.
The technical looks kind of good right now. We got a bit of a double bottom forming. So
Yeah. It has a lot of the right things you would want. Nothing is ever certain, but this is about as good as it gets, certainly that I've seen in 40 years.
okay, all right. And uranium. Can you talk a bit about uranium? We've had a bit of a run up here recently.
Got in it early. I got out, then I got back in. But there's this guy, Steve Barton. He's been saying no, seriously, you've been saying the absolute, and I'm not saying that because you're interviewing me. You've been saying the absolute right things about it. If there was a certainty above all the metals, that's the one. Just what I don't want to see, and that's what got me out the first time, thankfully, is suddenly when it took off, every retail person was on Twitter showing rocket ships going off and we're going to 100 and all. When you hear those things, you got to take something off the table. But I've said all along, the arguments for it continue. The bellwether, I said, so goes Cameco, so goes the uranium. They're making new highs. Been in the stocks since under 10. I think today it was 31 or $32. I've always said it could be 60 or 70. I think that's still a market with most of the upside still left, but slow and steady, and it doesn't hurt to take some profits along the way.
Yeah. Okay. We just took some profits last week. We'll see how that irons out. Okay. We talked a little bit about oil. What are some for the retail investor? What are some ETFs that you might think for oil and then for natural gas?
I don't follow anyone in particular because I haven't been in oil. When oil went up a lot, people I knew were in it. I just come out because of the fears of the economy and the market. But we are going to head to another energy crisis again because of what we failed to do here. We went from, I don't know how we did it. We went from really self-sufficient to almost back to we're going to have to beg if anything happens again. And now the people that we're going to have to go beg to, they might have been two-faced with us back then. Now they have no face to us. Saudi Arabia is getting into bed with China and Russia. It's making peace with one of its mortal enemies, Iran, and all that after Biden's last visit. Please, Joe Biden, don't go back there again because we'll have lines again trying to get gas if you do. We've handled it terribly from a geopolitical standpoint. We're drawing down our reserve. The whole idea of the reserve was to save it in case for a couple of years we couldn't get oil anywhere. And this guy's done nothing but sell it off since then. It's idiotic. But what could the Steve Barton or Peter Grandich do individually other than talk about it as we're doing now? But it is stupidity. But we will have another energy crisis. So if oil keeps going lower, and it's not going to have to go that much lower to start getting my interest again, it's probably going to come a time when we have to start looking at some of those things. But for me, it's not that time yet. And I still think things like uranium, copper, and gold and silver, and even things like zinc and phosphate are still a better bet at this point than trying to bet on oil and natural gas.
Okay. All right. And where is Peter Grandich putting his money right now?
What's left of it? So Peter Grandich still doesn't want to own general equities because I just think at best, the US stock market and most Western world markets will go into trading ranges. There's a lot of difficulties that haven't really only just been touched to the surface. My biggest fear, Steve, is this. Somebody explained to me at almost $32 trillion on our way to 50 trillion. That comes from the Congressional Budget Office. Just on natural expenditures they expect over the next 10 years. Someone tell me, how do we not only pay the debt back, how do we even pay the interest? The can is not going to be able to kick one of these days with the debt limit store. They're going to go kick the can and it won't move. And you don't want to be around when that day happens. And that day is closer now than ever before. So it's very hard for me with just that issue, let alone all the other geopoliticals and quite frankly, some of the social issues that are happening now. The wokeness has become so prevalent, and yet it's so small percentage of people that embrace it that the vast majority of people are going to get to the point of only one or two things are going to happen, Steve. They're either all going to cave and try to hide on their own somewheres, or they're going to have to put up a fight, and the fight's not going to be pretty, and it's not going to be over. It's not going to be over in a day or in a week. So it's very hard for me to have a very positive outlook from a secular viewpoint. My spiritual side, they can never take that away from me. I'm secure in where I hope I'm heading to. But in this world, I still think there's a lot of issues that would not want me to be heavily invested in general things. Specific things that we know we're going to need no matter what happens, like you and I discussed, yes. But just to be, in it and think it's all easy. The other quick problem, Steve, that's going to match the debt problem is the retirement crisis. When 2/3 of the people working paycheck to paycheck, Steve, how are they going to retire? And with more and more people coming into this country, perhaps not the most legal way, and more people becoming dependent on government services, more and more people are getting in a wagon. those of us less pulling the wagon, it's becoming harder and more costly. Sooner or later, we're going to say, hey, I want to get in the wagon too. And then there's going to be nobody to pull the wagon. So I still think we have a lot of negativity to go through over a period of time. And I'd rather be a live chicken than a dead duck.
Yeah, I think you hit the nail on the head with your battle of the ages theory, and it's going to be once the younger generation has more political influence than the seniors do, that's going to be exactly like you said, the battle
You,
of the
you said
ages.
something very interesting, Steve. I think younger people at their age now are more politically active than when I was that age. So I
Okay.
think they're prepared to be more political. Plus, while the boomers have the wealth, as we die, it's transferring to that younger generation. So they may not have the political power now because the boomers still have a lot of the money and they can influence politics, but it's shifting. And one day we're going to get to that cross. And when that day comes, here's the issue that's going to arise, Steve. I don't want to take, if you want to cut off, so I'll stop at this. You're going to have a man 85 and go, hey, I need a $500,000 lung transplant, Medicare. I want you to pay for it and all. And
Yep.
some 30-year-old kid's going to say, oh, hey, grandpa, you lived to 85 and all. They're taxing me to death. I can't pay any more for all this. Cut him off. And everybody says that ain't going to happen. And I say, you know what? Just look at Canada. Canada has now openly, actively pursuing seniors who feel that they're struggling both financially and mentally. Just take your own life and we'll help you. And so this age battle is not only coming, it's going to come at a heavy, hearty price, especially for the people who have limited or no funds. They are not going to be supported by a government where here we see in Canada that's actually helping and supporting them to take their own lives. I personally, and again, this is personal, don't think anything should ever come to where we should take anybody's life for the sake of just they become less of an economic cost then I'm going to have to give something up. Somebody shouldn't die just because I'm not willing to give up something little myself. So, but these are all social and political issues that are going to drive economics and eventually drive the market. So if you don't take them into consideration, which most financial advisors don't, Steve, they don't get serious like you and I do. They're only focused each day, how do I make my next sale? How do I make my next sale? That's when the issues are really going to come and hurt people across the board.
Yeah, sorry, I got the gardener outside right now. I'd see the same thing. It's like government assisted suicide in Canada. Like this really is clown world. I can't, I never thought I'd see that day. But maybe that's coming to America. I don't know. We'll see. Okay. Do you have any closing thoughts? How can our listeners get a hold of you? You do retirement planning and financial planning. You want to give them?
Sure. Well, here in the U.S., for U.S. citizens, we do what's called an alternative to traditional financial planning. You were kind enough to interview me and my partner. We believe cash flow is king, not chasing net worth. But for now, if people want, like you, and you have a very good Twitter page, by the way, Steve, uh, I'm on Twitter. That's where
Thank you.
I find the best way to communicate at this point. I do have a website, and I do occasionally YouTube videos. And of course, when I'm privileged and honored to be interviewed by people such as yourself as well.
Awesome. We will put a link down in the show notes. Peter, thank you again for coming on the show. You have a great rest of the day, sir.
You too, Steve.